The crypto market woke up to turbulence. After several calm sessions, Bitcoin plunged over 8%, falling to just above $104,000. Ethereum followed, dropping nearly 6% as risk appetite evaporated across global markets. The trigger wasn't inside crypto, it came from Washington. New trade measures against China rattled investors worldwide. President Trump announced 100% tariffs on Chinese exports and hinted at export controls for key software sectors. Equities slipped, commodities reacted, and crypto, still treated as a high beta asset, absorbed the shock head-on. Across the board, liquidity thinned. Altcoins bled double digits as leveraged traders exited positions. For many, it was the first real stress test since Bitcoin's run to all-time highs earlier this month. Analysts emphasize that this drop differs from recent profit-taking phases. It's not a slow exhale, it's an external jolt colliding with technical fragility. At the same time, more than $5 billion worth of Bitcoin and Ethereum options are expiring this week, fuel for volatility right as confidence wavers. That combination, macro shock plus derivatives pressure, often leads to overshooting. Prices can fall too far, too fast, before discovering balance. Still, beneath the surface, the market's foundation hasn't cracked. ETF inflows remain historically strong, showing that institutional interest hasn't disappeared overnight. On-chain data reveals no mass exodus from cold storage to exchanges. The selling pressure appears concentrated among traders, not long-term holders. For Bitcoin, the next support lies between $95,000 and $105,000. A decisive break below could trigger automated liquidations, but defending that range would confirm structural resilience. For Ethereum, key support sits near $3,500 to $4,000. Recovery above $5,000 would restore bullish momentum. Market veterans remind newcomers that volatility is the price of opportunity. Every major cycle endures external shocks. What matters is how quickly liquidity returns afterward. If ETF inflows resume next week and macro headlines stabilize, buyers could rebuild confidence sooner than expected. For now, the dollar's strength and global policy noise dominate sentiment. The stronger the dollar becomes, the more pressure crypto feels, but those cycles tend to reverse once policy uncertainty clears. This environment rewards observation over reaction. Many traders who sold the last dip were left watching the rebound from the sidelines. The same lesson applies here. Structure first, emotion last. As the week closes, attention turns to options expiry. How market makers hedge through that event will decide whether prices stabilize or swing again before Monday's open. In either case, the long-term thesis for digital assets remains unchanged. Adoption grows, infrastructure deepens, and the cycle evolves. The message from analysts tonight is simple. Short-term pain, long-term pattern. What we're seeing is turbulence, not terminal decline. For more insights on Bitcoin, Ethereum, and the forces moving the crypto markets, remember to like, subscribe, and keep learning here at Crypto in Black and White.